Core PCE came out here as expected, 0.2% employment cost index, which is a big one mentioned by Jerome Powell here on the Wednesday's Fed meeting. They actually he did point to that as an interesting figure, so that's why it is there as a red folder here on Forex Factory. Employment cost index was lower than expected quarter over quarter, probably what the Fed wants out of a number like that. But again, PCE coming out as expected. Let's take a quick look at how the market is responding to this. We're looking at an hourly chart off of the 1 hour chart here. So this is the dollar index. Now, quick look actually at the 4 hours. So prior to this, look at where we tagged. We just barely missed this 102 level before price took it back over and started pushing back down. The dollar index, did it actually hit the 61.8% retracement? It basically did. Look at this. So price came just up to this 61.8% retracement. The 102 level came in and found some rejection. So the question is, will this follow through, and what is this doing to other markets? Let's take a quick look at gold here. Gold pushing back off the lows, off of the reaction of this. Let's take a... So here's the thing about the gold market here. Gold market did put actually in a lower high here, which is a little bit concerning for the bulls out there. If you're looking at the gold market, there's a couple things here that I would point to. One, I really don't like that we took out this lower, that put in kind of a lower low, right? This was a big, didn't love that factor in the technical side. Double voice fix it. Do you guys hear me twice? Let me know if the sound is messed up. Please just let me know if everything is okay. Anyways, I did try and take another gold long yesterday. Again, did not work out very well. Tried to catch the pullback. So that one is no longer kind of on my watch list here. Everything's fine. Okay, cool. Thank you guys for that. Every time someone makes a comment about audio, I just have to check with the audience, make sure I'm not, blasting eardrums or, possibly speaking in 4 different, pitches on someone's screen. I don't know. Okay, let's take a look. S&P 500. How's the reaction here? Positive reaction overall. The stock market does. I noticed this on, just before I left the house today. If we take a look here, S&P 500 did actually find some support in this area. Price hit this 45.40 level.
Did you know our market scanning software, the EDGEFINDER, just got even better? Check out our newest asset, Bitcoin. That's right, Bitcoin was our most requested feature update, and we're so excited to announce Bitcoin is finally here with plans to add even more crypto in the future. We've also updated our most popular feature, the Smart Money Tracker, adding even more data than before. The EDGEFINDER not only automatically scores 8 different metrics for each asset to give it an overall buy, sell, or neutral score, but it also keeps track of bank and analyst positioning, stores historical fundamental data, shows how assets are trending throughout the day, and so much more. Right now, our YouTube viewers can get the EDGEFINDER at a discounted price when they use promo code A1YT. You can check out the EDGEFINDER with the link down in the description below, and again, get it for the special discounted price when you use promo code A1YT at checkout.
Yet again, bounced off of it. And here's the thing. Yes, there was a big sell-off in the S&P yesterday, but the strength here of the S&P 500 is still there, right? Buyers still lining up to pick this thing up. And I am honestly wishing I was in this trade. I actually tried to buy it yesterday and it did not work out for me. I may look to try and trade this again. I took gold yesterday and I took S&P yesterday, both of which here was the level that I was liking on the S&P 500. So clearly I picked it up. I was wrong about that. So I made this point yesterday, but my win streak ended officially yesterday when it comes to things that I've been trading. However, that's part of trading. The thing is, when it comes to trading, it is not about one single trade or 2 single trades. It's about many, many trades and how you do over the longer term. So am I going to buy the S&P 500 right now? No, probably not. If it does give me a a chance to come back in around here, I might take a closer look at that. So again, higher time frame uptrend. I do like the S&P. Let's take a quick look at NAS, see how NAS is performing here today. NASDAQ finding support right around this 15,435 level, let's call it. You can see multiple times where price essentially found a low here and pushed off of it, pushing off of it nicely here this morning so far. So how do you trade this? Well, for me, there's two ways I could potentially look at trading the NASDAQ. And it would involve either a break and retest above the previous highs. So something like this, breaking out, retesting, continuation plays. That could be a play. And then the other one for me would be a deeper retracement back down into the bottom of this support zone, in which case I could probably try to pick it up. Euro off the daily chart, we'll do a little multi-time frame analysis. The reason I want to pull up the daily chart is the daily chart here has been battling with this zone of support for a bit here. You can see really strong level of resistance here. So sellers were able to take control of this market, push it back down. But then on the breakout here, I think Frank is after this pullback here, right? So pullback into support. Question will be, can we push off of that support and continue? You know, here's the thing. I'm going to just play devil's advocate here for a second. I'm not necessarily, you know, Frank has a trade, he has his trade. That's his thing. However, I personally don't love the long trade here on the euro. As much as the technicals look good, my only concern is that the ECB signaled that they're very much in the same camp as the Fed. They're, you know, possibly another rate hike is on the table, but they're going to be data dependent, and they're seeing some progress. So that took away from, I think, the euro's steam that we saw. So there's a fundamental reason that we sold off here. And I think from a technical breakout or technical bounce, this is probably not a bad trade. But for me, I just don't love it as much as perhaps other things that I could be trading personally.
And they did increase the rates, fortunately. So for now, we're just waiting for CPI and other economic news so that we can know if maybe they will keep increasing or not. But for now, if they increase, I think we'll be left maybe with one increase. After that, maybe we will see what will happen. But as they said, they are still waiting for enough data, so we can't able to judge. We can't really judge much currently. But it seems like the market doesn't really care much. It seems like already the market is reacting into that positively. You can see US30, NASDAQ, they did not actually give us some crazy sells. Unfortunately, I can't able to share my screen. We have a load shedding. So, okay. Yeah. So it seems like the market doesn't really care much about the increase, as long as we're going to look at the CPI. And what I have seen is for the past 2 months, CPI was slowly, especially core CPI, it was slowly going down. So I'm hoping maybe this month also, which we're going to receive next month, maybe CPI will be going down. And if it keeps going down like that, it's obvious on our side to say, okay, there is a room for them to pause. But sure. Also, even if they increase, I don't think it's going to be a surprise. If you still remember last month, we did talk about this, that as long as they said they're going to increase, it's not going to be a surprise anymore. And the market might not react to that negatively. And we saw that they just said, oh, we're increasing, maybe next month we might still increase. So once the market reach that point, when we're going to receive another rate hike, still it's not going to be any surprise anymore.
Sure. Yeah, no, and I think just the reaction from the indices this week has been interesting. It's one of those things, as you mentioned, the market kind of shrugged off the fact that they did, of course, raise interest rates by 25 basis points, partially because that move was expected, right? There was very little question as to whether or not the interest rate was going to go one more time higher. It is, as you mentioned, all about what is to come next. For newer traders, newer viewers, or perhaps even people who are newer to fundamentals, what you have to understand is that when it comes to economic figures, Fed monetary policy, or just central bank monetary policy, it's all about the future. It's all about what is to come, what is expected, because the rumors in the markets are far more important than what actually comes out, which is kind of confusing at first. But again, that is why everyone expected 25 basis point rate hike. That's why we didn't see an immediate response either direction. What we really got more response from was kind of the commentary from Jerome Powell after, which had hints of kind of just no urgent need to raise rates right now. And the market, of course, was kind of expecting that and loved to hear it. So the NASDAQ, the indices across the board, you mentioned US 30, S&P 500, all very strong. And today still staying, we haven't had any major breaches of support off of the higher time frames. I'm looking at the 4-hour chart here for the NAS. You mentioned US 30. If you take a look at US 30, this thing has been on just an absolute monster move here, ending, I believe, one of the longest streaks of history. I don't know if you had heard that, of up moves in a row. Kenzo, I thought that was very cool. So if we take a look at like DIA, it was like one of the biggest stretches to the upside. Yesterday ended that streak, but still very, very strong momentum here to the upside for the indices. Kenzo, what do you think about gold? Obviously, gold did catch a little bit of rally recently. This is a daily chart that we're looking at here. But if you break it down to the 4-hour chart, there's kind of this key level of resistance right around 1980, let's call it, where price just struggles to get above, and kind of forming one of those classic M formations going on right now. What do you think about gold right now?
Yeah, actually on gold, I think last time we did talk about it, I was actually on a sell, and unfortunately, it's actually yesterday. No, I think it was on Wednesday. It did not actually push a little bit lower. It actually happened yesterday, but it's not actually any surprise. Mostly, regardless of maybe US 30 and let's say indices like Nasdaq, and they don't really react much to any economic news. So gold is the one which actually everyone is checking. So every small economic news actually matters, especially on gold. So we saw some positive stuff happening. That's why we saw some actually sell positions. But I think if maybe you go or maybe on a daily time frame, I think maybe we have a room for a retest before maybe we push the upside. If not, maybe we'll have to wait for that breakout. I think the market might come back again and retest before maybe we push the upside.
Yeah, no, I think, you make a good point there, right? Because economic numbers can be a little bit confusing when looking at, the indices. If you think about it, Kenzo, it's kind of like if retail sales are good, right? On one hand, hey, that's, that could be inflationary. The Fed might need to react. So that might cause the market to go down. But wait a second, retail spending means that companies are going to do better because more spending means more profit. So you make that good point about economic figures. And then you look at gold, which is not poised to benefit from economic growth, right? So that is, as you mentioned, in some ways why a lot of people love to trade gold, because sometimes it trades a little bit closer to, I guess, the actual economy than somehow the stock market does, or perhaps what Fed monetary policy is going to do, watches very, very closely, which is, I think, why, there is that potential, there's that possibility that more rate hikes do come, and gold is probably being a little bit suppressed from that. But if that gets squashed out any further, you make that point, you may get a retest of those highs. And if that does happen and you get the breakout, I think, that will probably be on good news about perhaps no further rate hikes, further, inflationary numbers that the Fed likes could possibly cause a nice breakout, but a breakout with confluence here. A lot of times, Kenzo, people who watch the streams, they'll say, you should only take a look at technical charts. There's no point to look at fundamentals. But what we're setting up here, Kenzo, I would argue, is that, the point you just made about that resistance zone, what would it take to break out of that resistance zone? Probably some measurement of CPI being cooler than expected, something that really means a lot to the market. And then you have not just a technical breakout, but you have a technical and fundamental breakout. Would you agree with that?
Yes, mostly for those who maybe don't really understand much on the fundamentals, actually, when we talk about gold, it's also a reserve, actually. So, and mostly, actually, or we can say something like a safe haven. So for now, we have US and the gold. So if gold's doing good, obviously big boys they actually move their money quick to gold. They buy gold, similar to when gold dollar it's actually doing great. So every small move. Next week we're gonna have unemployment claims on Thursday, which happens actually every week. So if any smaller move happens there, if let's say maybe unemployment claims or jobless claims, they still push up. It means gold can break that very easy. And currently on a bigger time frame, that is actually a buy zone on a long time. It's actually on a very nice time to buy in a long time. If maybe the coming CPI, let's say two of them, they all go down. If you bought here from now on, it's going to be the lowest area. The market might take time to come back around that level. So every economic news actually matters most on gold. So every small move, everyone is looking to buy more very quick.
Don't forget to check out the links in the description if you want our broker recommendation, access to our free Discord, free EDGEFINDER, or want to chat with us on Telegram. Remember, you can watch us live in the markets every morning starting at 9:30 a.m. Eastern Time, and we have lots more free trading tools and content available on our website, a1trading.com. Thanks for watching.